Good day, guys. Welcome back to this channel. So, if you are new, you've not subscribed, make sure you click on that subscribe button, like and share. So now let's take a look at gold. Today we actually had a bearish move. One of the reason is that we also the news that was released about our US, right? I think it was ISM. The news was released. It was released around 4 p.m. around in this time here. It was around here that they released it about 4 p.m. I don't know what time it is your own place that they actually released it. But once that news was released, we actually saw a bullish move on our DXY or USD index, as you can see. So any other things we will be trading to our USD tends to drop, like our gold, and as an example, gold to USD tends to drop. So it's not a surprise. Now, are we going to continue this bearish move? Definitely not. We would soon have we will continue our bullish move. This is just like a setup. I want you guys to see it as a setup on our gold, right? I'll just this is like a setup for us to actually go long on this gold. I'm seeing this gold as a pullback, right? This gold will still continue to give us that bullish move. As at now, this is just like a pullback. Once the pullback is over, then we will continue our bullish move on our gold. So just have it in mind. Now I'm going to be telling you different reasons why I still see this gold as a bullish move and why we would go long for the next day. So first of all, let's start with this moving average, which is 10 period moving average. Now, for you all that trade this, I use it, and for those of you that follow me a lot, I use this moving average a lot. Once this price is above this moving average, I still see this as a bullish move. We still consider this as a long. So this is one of the reasons why this gold, we still consider this as a bullish move, and we have to look for a way to go long, especially on the daily time frame. Now you can take a look at this. You can see this higher highs, higher lows, new highs, pullback, new higher highs, a pullback here, a new highs that broke this previous highs. Guess what we've got here? A pullback. Now, is this pullback over? Well, there are two ways we would expect, where we would watch out for the pullback. One is that if price has reacted to a level previously multiple times, I do see it. If price has reacted to a level previously multiple times and price is close to that level or price has get to that level, then we expect price to react at the same level. We saw that price has reacted to this level, right? Let's see if price has reacted to this level again. We saw a reaction at this level. So, we can go further back. We can see price react to this level. So, let's just start it from here. Price drop, gave us a pullback, reacted to this level drop, right? That is one. We saw price kind of, went up. We saw price went up, drop, sorry, price first of all dropped, then went up, came to this level, reacted to it, gave us a pullback and continued this bullish move. So we expect price to actually close into this level, drop, close into this level. And guess what we will be expecting on gold? We'll be expecting a bullish move. So once this bearish move on this gold is over, then we would expect a bullish move. So it just depends it just depends on when you are watching it on, or it just depends on when you are watching it, because the price would have moved a lot. Possibly if you are watching it early, you can look for a way to actually go long. So we will be watching out for this level price to get to before we continue to go bullish. That is reason two, right? And now let's take a look at another reason why we will be expecting this bullish move from here. Is we would add our Fibonacci retracement tool. Though it is not 100% correct, but at least it is 70 to 80% correct. I use it a lot, especially when price is giving me a pullback. And we will be watching out for a level of 23 and 38 too, right? So this is the highs. So this is the highs on our Fibonacci retracement, and we will start from the low here. So this is a level of 23.6, and you can see that what I'm talking about. We would expect price to get to this level of 23.6, right? Then we would continue the bullish move, or we will see it drop to a level of 38.2. Then we will continue this bullish move, right? So that is the level where what I watch out for, especially when price is giving me a retracement. I watch out for two levels where I know price will definitely change its direction and continues to go bullish. That is a level of 23.6 and a level of 38.2. So a level of 38.6 I'm watching, a 23.6 I'm watching. Reason is that we saw price has reacted to this level previously, so we expect price to get to the same level and react to hit, right? So I'm coupled with the fact that this is at the level of 23.6, so it makes sense for actually price to tap this 23.6 and continue the bullish move on Fibonacci. And then again, we'd expect this price to drop a little bit, right, to hit this moving average. By that time, price should hit our moving average. Once this price has hit the moving average, what do we expect? we expect a possible bullish move again. So that is another reason why we would watch out for a bullish move on the next day on gold. So we would want this price to drop a little bit, hit our 10 period moving average, then continue a bullish move. And again, let me show you another reason why we will be expecting a bullish move on gold is to take a look at our DXY or USD index. So we would want to know this trend for this DXY or USD index. We can see that this is a lower lows and a lower highs bearish move. So let's start it from here. We'll see this as a drop, and we will take this as a correction on DXY. Now here comes the drop, and we will see this as a correction. We will take it as a drop. You saw that price has reacted to this level, right? Twice. We will take this as a correction. Then price broke below it. Notice that price has reacted to this level, right? Once price give us a pullback, we expect price to get to this level it has reacted to and react to that same level again. Reason why we would watch out for this level, we see that price has reacted 1, 2 here. So if you zoom it out, you see that price has also reacted to this level. Previously, we saw 1, 2 at this level, kind of gives like a double top bottom here. And also price has reacted to this level. This is one of the reasons why I highlighted it. We saw price reacted here 1, 2, 3, 4, 5. So price has reacted here like 5 times, right? So now price is giving us a pullback. So we expect price to get to the same level it has reacted to like 5 times. Once it gets there, then we should expect price to react and continue the bearish move. So once this DXY or USD index starts giving us that bearish move or starts dropping, then we expect a bullish move on this our gold to USD, right? And I just said there's kind of like a correlation between USD and our gold. Once there's a drop on USD index, then you tend to see a bullish move on gold. But once that USD index starts going bullish, then be expecting a drop on gold. Now that we're having a pullback on this USD index or DXY, which is bullish, it's not a surprise that we are seeing a bearish move on this gold. But once this USD index starts correcting itself and it corrects itself and start dropping, right, then be expecting a bullish move on this gold for the day. So now that is it on gold. Now let's see what this 4-hour time frame says. So we would see here, right, you can see price has reacted there, so it makes sense for price actually come to this same level and tap. So if in case price drops further down, right, we should see it take out this lows, which I don't think it will happen. At least this level will be 38.2, right? 38.2, right? So I don't think price will actually drop to this 38.2 on Fibonacci level, but let's see, watch out for a level of 33, right? Then we'll continue our bullish move on gold. So gold, watch out for a bullish move, but first of all, a pullback needs to be over before we continue this bullish move.